Hello traders out there in Traderland, this is the weekend edition. My name's Dez here at Grok Trade. This weekend edition is good through Sunday, July 22nd, 2012. On Friday, market sell-off. We do have a drop of 120 points here on the Dow, down 0.93%, the S&P down 1%, 1.4% on the Nasdaq, Russell's down 1.3%. Banks off yet again, 1.2%. VIX spiking up 5%. Gold higher, silver higher, U.S. oil down 1.3%, and you have the U.S. dollar, check this out, gaining speed and momentum up 0.75. We have a lot to go over. Let's hit the ground running with some news. This week we had unemployment claims come in ahead of estimates by 21,000, which is bearish for the markets. Stocks around the globe here on Friday fall on the Spanish region's aid request, and oil falling due to Europe's debt issues, and it seems to be reviving economic fears across the board. And it looks like there's significant fears out there that Spain may eventually need a bailout. And man, Europe's just taking it on the chin. It looks like Spain stocks had its worst day in 2 years. At the time of this video, we have gold at $15.84 and some change an ounce, and then crude oil at $91.65 per barrel. Look at the S&P daily. Want you to pay attention to these two big blue lines heading higher. We are in an uptrend. We did break over a resistance line, but here's the issue. Friday we closed back down below it. That is no good. Because of that, I drew another line here. So now pay attention to those two blue lines. Now you have a good old-fashioned rising wedge. Let's go to the weekly chart here, and I want to show you something that I was not expecting. We had this big drop on this weekly chart. Found support at this trend line. We go higher, and then for the week we were looking really bullish here for a while. And I was saying, once we hit this a couple weeks ago, we hit this 61.8 Fibonacci area that looked for a drop. We got that drop, but it bounced right back. So I thought, oh, there it is. We could be heading bullish here. But what's interesting is by Friday, we came back down, closing, guess where? Right at the 61.8. Gang, that is a big time bearish area for the markets to be stalling, because if by that happening, you have what's called a bear pullback. That is its last place, its last level that it needs to be able to clear to shake off this bearish sentiment. But it was not able to do so. We're there now. We are consolidating sideways. We still remain above the 20-week moving average, which is good. The MACD oscillator is above the zero line, which is good. But be very careful, especially if we go below this 30 or 1344. Mark your calendars. If we go below that, markets will be in significant trouble. Now let's go to a monthly chart and see what's taking place. We had this big line down, which we had resistance, now acting as support. We pop up here. Let's blow this up so we can really see this. We make a higher high, higher low, so that's not too bad. For the month, we only have another week or so of this month left. So the question is, what's this going to do? Are we going to end up with a red body down here or a green body up here? So it's something we're going to be watching for. Let's go to the Dow. Here is the Dow monthly chart. Same thing, higher high, higher low, and we have this trend line. See this? Support. We're just sandwiched between a resistance line coming across and this line coming in. So it's going to have to pick one direction or the other. But on the bigger time frame, if you look at the two blue lines that I have here, that is a rising wedge. And if I go to a weekly chart, you can see the two blue lines, rising wedge. We're stalling at the 20-day or 20-week moving average right here. On the daily, you can see that we had a rising wedge. It did break down. What was acting as support now is acting as resistance. It didn't surprise me to see us hit our head and then drop here. We talked about that on the video. This could turn out to be a double top trend reversal pattern. M for murder. Bad things happen when you get double top trend reversals, and then things could drop. we dropped on significant volume. I want you to pay special attention to that today. Let's go over here to the NASDAQ daily. Big symmetrical triangle, but the blue lines we are in an uptrend. The problem with this uptrend is we hit resistance on this blue line, we hit resistance on this blue line. We should have come up here and hit resistance. We failed to do that because of this major trend line coming down. We hit our head there and stopped. So now we're within a triangle. You can see it right here. Pay special attention to that. We are caught up within the moving averages. We have a major red trend line coming down that's been tested as support and resistance multiple times. If we go below that, we have a really good chance of breaking down. So be watching the daily on the NASDAQ. You can really see a pretty formation here. On the weekly, you have resistance, 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 and resistance, support, support. We have a consolidation taking place here within the apex of a symmetrical triangle. On the bigger time frame, look at these two major trend lines. You can see that these are a big time rising wedge. If you don't know what some of these patterns are that I'm referring to, go to the chart school at the website. That will help you out. That chart school is priceless. It's genius, and you'll really like it. Here's the monthly chart on the NASDAQ. Look at the two blue lines going higher, nice uptrend. But then look at my till lines. We have a lower swing high, or a higher swing high, but it did not reach this upper part of the trend line. That is problematic. Furthermore, we have a trend line coming down that it hit its head. So I'm watching this 31.34. You can mark that on your calendars. But as far as the till lines are concerned, it's a rising wedge taking place within a uptrend. If it starts to break down and breaks down below this blue line, this monthly line, the markets are in severe trouble. Let's go over here to the Russell small caps. Now the small caps, they failed yesterday, or Thursday rather, when everybody else was bullish. So it's showing some relative weakness right here. On the monthly chart, it's already red. We do have a higher high, higher low, finding support at the 20-month moving average, but we have these two big lines. Watch these lines like a hawk. And then we have the weekly chart. We have a what's called a head and shoulders, shoulder, head and shoulder, trend reversal. We drop, 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 find support, we come back up, find resistance, we pull back. So we have a bull pullback within a symmetrical triangle on the weekly chart. We are below the 20-week moving average here. On the daily, we broke down of this trend line going higher. So we pulled back, support, 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 support. Friday we break support, we break down below the 20-day moving average. We have support coming at support, support on this green line support. We're there again. If we go below 789, watch out. So I have that on my records also. While we're here, let's go to GLD. For you gold bugs, this is the daily chart. Check out this symmetrical triangle caught up in the moving average. Look at these moving averages, how wide they are here, and look how they start to tighten up and they coil together. That is building strength. Mark my words, this dude is going to pop very, very hard and fast, or drop very hard and fast. Anytime you have patterns that coil like this, gives us awesome opportunities to make some significant money in the markets. Here's another look at it on the weekly. On the weekly, we had this big run higher. Now we go into what's called a bullish pennant. Bullish pennant is more bullish than it is bearish. However, here's the problem. We have support or resistance here. Becomes support here. Support, 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 support. It can't get off the floor. This is a low base formation, or even a very small bearish pennant. And this could break down. If I have an alert set, if we go below the 100-day moving average, or 100-week moving average rather, we go below 150 on GLD, that is a big time area to be watching. You can see my major trend lines here on the monthly on GLD. We're on the wrong side of this major trend line, but we are condensing, pinching. We are below the 20-month moving average, but we're finding resistance at this upper trend line, support down here at this lower trend line. We are pinching. Expect a significant move, and very soon. You're hearing it here. Let's go to Apple. Now Apple, even though it's fundamentally very, very strong, I don't like the volume that came in on this sell-off. I don't like that we could not hit our head at this resistance area again. So we hit resistance, resistance, and resistance here. We're into this triangle with this gray line and this blue line coming higher. But this is thunder in the distance. If I go to the weekly chart, here's the problem. Support, 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 support. We rallied big time, a nice bull pullback. However, even with this nice up leg on the weekly chart, we have failed to even make another even high here. So because of that, we can't get off of support. If it breaks that support, that is death to Apple. So I'm saying, technically speaking, Apple is in significant trouble. If you're holding longs on that, make sure your stop losses are appropriately placed, especially if we go below the 20-week moving average. That is a major issue. You can see here we're building a high base. A high base is good. I like the volume drying up in that. We could start to go higher. We could do that. But we need to blast through 650 and right now. If not, we're going to stall with a little bitty, maybe double top, and we're going to have a nice little pullback, and I think we'll probably go below $500 if we do that. We'll probably go back to this 20-month moving average, which may put us around 450 or so, but I'm a little early with that. Let's go to Facebook. A lot of you guys are doing Facebook. Here's the weekly chart. Let me show you something. Let's open this up. We had this big drop, we had this little bear pullback to 38.2% Fibonacci, and we have since dropped here. On the monthly chart, I want you to see this. We have this big triangle. It's a bearish triangle because it develops at the low of this leg, and we're having a hard time getting ourselves off the support line. So we could have another run to the downside on Facebook. However, this could be a buying opportunity for those that are bullish on it. If we go down here, say around 2850 area, look for a play on that, and then have a tight stop loss, maybe something under 28 bucks, and then look for upside potential if the markets in fact go bullish. And a shout out to the guys at Stock Tweets who have been recommending us, and also Trade to Win. You guys that are in the forums over there recommending us, and then those in the chat room at Scott Trade, thank you for recommending us, and also E-Trade, thank you for recommending us. Oh, geez, and EliteTrader.com, thank you for recommending us. So I know I'm missing people, but I want to be more proactive on saying thank you for you guys sending people to get the free 101 courses, the free chart school, and the free daily videos that we do. We have a lot of analysts here. We do stock trades. If you want real live stock trades, take a look at Mark. And if you want futures, especially if you're an ES trader, look at Matt. If you trade the Qs, look at Carolina. And then make sure if you speak Spanish, you watch Anita and Miguel. And yeah, so we appreciate that. Alright, with that, I'd like to leave you with a coupon, special code, Grok50 for the 201 courses, 6 courses, 28 lessons, 6.5 hours worth of home study. You can do it right now immediately. Get started. So anyway, with that, share us with a friend. Thank you for being a part. Take care, and very safe trading to you.